Hello and welcome to Market Domination. I'm Josh Lipton, live from our NYC headquarters. Earnings day for Tesla. It's here and the expectations, they are heightened. And we're going to have extensive coverage of this high-stakes Q3 report. But right now, there is just an hour to go until the closing bell, and stocks, they are lower. Let's get a quick check of the popular averages. The Dow is down about 320 points. The S&P 500, your broad gauge, is down about 0.6%. And tech-heavy NASDAQ is down about 1%. Let's welcome in here our data and markets editor. That would be Jared Blikre. Jared, what is the latest in today's trading action so far, my friend?
Thank you, Josh. A bit of weakness. You can find a lot of it in tech. We're going to start with the Dow first. As you said, down over 300 points. You can see in the intraday price action had a bit of a spike down in the noon hour. We are off of the lows right now, but not by much, down about 0.7%. The NASDAQ, where you see a lot of those tech stocks and a lot of the losses today, that's down 1%. And the S&P 500, very similar to the Dow and NASDAQ for that matter, that is off about 0.5%. But check out the small caps. Those are down 1.5%. A lot of times you see the small caps down kind of a multiple of whatever the majors are doing, and that is what we are seeing today. Also want to point out the VIX, which has come down nicely in recent days, spiked up early. It's off a little bit off of its highs, but I'll show you the 10-day. You can see still kind of elevated, although within the last couple days, we finally came back down below 20. That's one of those big psychological numbers, but we got to move on to bonds. 10-year T-note yield down another basis point to 3.95%. Well under that 4% mark that it crossed last week. And the 30-year down 1 basis point too, to 4.54%. Also just show you the US dollar index down just a smidge there today. And I said tech was kind of leading the way down, but industrial is now actually the biggest loser. Communication services and discretionary, all these mega cap sectors, that's where we're going to see a lot of weakness. We'll check out the NASDAQ 100 in a second. First, want to point out that energy is up 1.5% today. That is the most profitable sector. And then you have staples, healthcare, real estate, utilities, all those in the green. That's a pretty defensive setup. So that's what the name of the game is today, and that would be defense. In the NASDAQ 100, lots of red, some dark red. You're going to see a lot of dark red in the semiconductor names. Alphabet, Microsoft, each of those up 0.5%. But for the most part, seeing a lot of outsized losers to the downside rather than the upside. Then we have the Dow, where I was talking about some of those green sectors being the safety trade. Well, Walmart, consumer staple, that's up 1%. J&J, a healthcare stock, up 0.5%. Procter & Gamble, Chevron, those are your defensive leaders today, and you're going to find those mainly in the Dow. I do want to show you, before I go pass the baton off to Praz here, standing by on Tesla, to point out GM. GM is up 1%. And I'm going to show you a 5-year chart. It was only yesterday that they finally took out those 2001 highs and closed at a record, and they're on track for another one today. And on that note, I will send it back to you, Josh.
All right, thank you, Jared. Appreciate it. Well, we're gearing up here for those all-important Tesla results after the bell. Investors bracing for a big test. Senior autos reporter Praz Subramanian joining us now with what to watch. Praz.
Yeah, Josh. Obviously, that's the big thing, the big main event tonight, Tesla, right? So a few things, top line numbers, looking at revenue here, $26.27 billion, that's what we're watching for. That's up nearly $1 billion compared to last year on adjusted EPS of 53 cents a share. But no, the big thing's watching that. So sales, right? Huge sales quarter. Last quarterly record, 497,000 cars sold. Not surprising given the expiration of the tax credit that happened at the end of the quarter. The question is, can you see that happen in Q4? What's going to sort of fill the gap after the loss of the tax credit? And they introduced the cheaper standard Model 3, standard Model Y, cheaper cars, less content, see if that works for them. But also, what's next for robotaxis, right? We haven't heard much in that from beyond just the expansion of the zone in Austin. Something's happening in California. When will they get rid of the safety driver? When is that guy going to go out when his cars can drive on their own like a true robotaxi like Waymo? We'll see. That's one of the big things we're watching today in the report.
What about China, Praz? What do we expect to hear there?
Well, we talked about this before. So Dan and I have talked about how China was doing quite well. The Model YL, which is the extended version car, selling decently there. Good registration data in, I believe, September. So China should be potentially a boost for them going forward if all things kind of stay the same there. But yeah, the big question is the U.S. too, right, with the tax credit.
Yeah, I want to hear more about those humanoid robots too.
That too.
Thank you, Praz. Appreciate it. Well, big tech earnings on deck. Investors bracing for Friday's CPI report as well. It's a combination that could set the tone for the Fed's next move at the end of October, with valuation stretched and the market still leaning heavily, we know, on a handful of mega cap names. The question now is whether the rally can broaden out. For more, we're bringing in Andrew Cry, Co-Chief Investment Officer at Crescent Grove Advisors. Andrew, it's great to see you on set. Let's talk earnings here first, because it continues to roll on. You heard from Netflix yesterday. Now, there was some disappointment there. All right, but after the bell today, you got Tesla, you got Big Blue, IBM. What have been your big takeaways from this earnings so far, Andrew? What do you make of it?
Yeah, I think on balance, if you look at the surprise levels, sort of, where the earnings come in relative to consensus estimates coming into this season, they look pretty good thus far. And I think a lot of people were saying, okay, we're going to continue to see the sort of filter through effects of some of the trade war disruptions, some of the tariff concerns, policy concerns and uncertainty. And I think what we're seeing so far is that actually corporate health looks pretty good in sort of broad terms in the aggregate, right? There are obviously idiosyncratic stories like a Netflix, something along those lines, but I think from our perspective, really shows that there's a healthy underpinning in the economy that's supporting corporate earnings health.
And do we just keep it that simple, Andrew? Do we say, listen, the economy is resilient, that's translating into what looks like healthy earnings growth, markets moving higher?
Yeah, I think from our perspective, if you look at where the Fed sits today and their policy stance, which has incrementally moved in a dovish direction, and they're doing that, now they say they're going to try to protect and sort of take out insurance against a labor market that might be faltering somewhat. We don't think the labor market's cracking or experiencing some like acute issue at this point in time. We think the labor market sort of normalizing, coming off the boil. Okay, so if the Fed is cutting, the economy is reasonably healthy, the labor market is reasonably okay alongside that, then you're putting stimulus into an economy that's okay. All in all, that's going to be supportive of corporate health and corporate earnings.
Now, how much do you think, Andrew, of that good news we've priced in here?
Yeah, I think that's the question in particular. If you look at the mega cap tech segment of the market, or really kind of the high beta, high growth segment of the market, and we talked a little bit about meme stocks before we came on here too, right? Just showing that there is a little bit of a speculative excess perhaps building in some segments. I think that can continue as long as you see financial conditions reasonably easy and accommodative in this environment, which again, underpinned by what the Fed is doing right now, sort of providing stimulus via rate cuts and forward guidance that they will continue to support the market. So, I think all in all, it tells you can continue to ride a wave of momentum, notwithstanding a few blips here and there, some technical corrections, but we think it's a pretty positive sort of environment for risk assets. I
mentioned meme stocks. I want to get your thoughts, just because that was making headlines today, right? Krispy Kreme and GoPro and Beyond Meat. I just want your take, Andrew, because some folks look at that and they'll say, listen, it's fun, it's entertaining, live a little, relax. Other people, though, might see it and they would see that as concerning. They'll say that's a sign of froth. Where do you come down?
Yeah, it's entertaining to wade into Wall Street bets every now and again and just see what's going on in the Reddit forums, right? But no, I think from our perspective, it's really more reflective and a symptom of speculative excess and ample liquidity, an accommodative Fed, kind of all these big picture themes that we tie back to here. And even, you want to talk about the debasement trade, all these sort of elements, gold going parabolic, right? This idea that there's just a lot of liquidity in the system right now seeking a home, and they're going to go to risk assets. And in some cases, it's partially entertainment, but a lot of it, I think, again, just speaks to a bit of a froth in the market broadly.
Here's the theme you call out. You say value stocks may be the best way to play the second chapter of the AI story. Dig into that. Explain what you mean by that, and what would be broadly the sectors to play that.
Yeah, so I think if we look at the first order effects of AI, and you look at an NVIDIA, you look at Meta, Google, you look at the names that are really tied to sort of the making of AI, if you will, that we largely think is priced in at this point, or at least there are a lot of expectations about what the future of AI is going to look like that are baked into those prices, right? We think the second and third order effects are, how does AI actually infiltrate the economy? How does it get diffused into other sectors? So take, financials, for instance, highly sort of labor intensive around regulatory requirements, just their ability to integrate tech to make things more efficient from a payments processing perspective, right? To use AI in novel ways to reduce some of the cost structure, to enhance margins. Industrials would be another one, as you think about the ability of AI to displace labor through autonomy, robotics, automation, those sorts of things. So we think that that's not necessarily priced into those names at this point. Now, it's going to take several quarters, maybe even several years to play out. There'll be a long tail on this, but nonetheless, we think those assets aren't necessarily priced for perfection right now, whereas some of those mega cap tech names are. And we think that's a pretty good relative value
attractive.
trade.
Yep. Andrew, great to have you on set today. Thank you, sir.
Appreciate it.
Coming up, duration of the government shutdown now in record territory here. We're going to bring you the latest on that. Plus, Mattel stock under pressure after its Q3 report. We're going to break down what has Wall Street concerned. Stick with us. The government shutdown is now the second longest federal work stoppage in U.S. history. And there's little hope for resolution in the near future, and the economic toll could be mounting. Washington correspondent Ben Worschel joins us now. Ben.
Yeah, Josh, so we're in day 22 of the shutdown, which does put us in the second longest shutdown in U.S., second longest of all time in U.S. history. The longest is 35 days, so we have a couple more weeks to get there. In the meantime, the Senate is expected to hold its 12th vote on this to end this shutdown. At some point in the coming hours, the timing is a bit up in the air because there's a Democratic floor protest happening that's now in hour 21, an anti-Trump protest led by Senator Jeff Merkley. So that vote could happen tonight or tomorrow. But either way, there's very little drama here because this is expected to be the 12th failure in a row to end this shutdown. In terms of developments here in Washington, before everyone leaves for the weekend, the Senate is going to leave tomorrow. President Trump's going to head for a foreign trip on Friday. Is whether any of these economic effects get mitigated through some kind of short-term action. One idea here in the Senate is a Republican bill to pay military members and some federal employees at the end of the month when a lot of those come due. That a similar effort has been blocked before, and a similar fate is expected to befall there. Another issue in focus here as we get to near the end of the week is farmers. The Trump administration announced they're going to do they're going to free up $3 billion to help soybean farmers who have been hurt by the Trump trade war. But the kind of overall picture here is that a lot more is going to be needed, including likely another bill in Congress at some point once this gridlock ends. Trump's first term farm bailout, for reference, was around $19 billion. So, and farmers seem to be in a worse situation this time. So those are two fronts to kind of mitigate some of the effects. But the bottom line is people are still talking about November as a potential timeline for when this ends overall.
And Ben, we're now learning about, just some more collateral damage, you would call it. This time around, it's flying, the FAA. What is the latest there?
Yeah, airports are always in focus in shutdown, but it's a different focus this time. Usually the focus is on TSA agents. Those are government employees who are asked to work without pay, and they're lower paid, and so there's a lot of volatility there. This time around, it's actually in the air traffic control towers. This is an industry that's had troubles for years kind of filling its ranks. The government says they're about 3,000 short of the number of air traffic controllers they want. So there's been staffing shortfalls for years now, and this shutdown has clearly exacerbated. We're going kind of every day, we're getting reports of what are now, but could broaden kind of scattered delays. We saw a bunch over the weekend. The FAA acknowledged that Tuesday there were delays at Houston and at Newark airports specifically because of these air traffic control issues. The fear here, of course, is that this starts to broaden out because air traffic controllers are going to miss a full paycheck in the next week or so, and they're already under pressure for this. These are folks who have a high pressure job, obviously, and they're already being asked to work overtime even before the shutdown, and it's just kind of building on itself. Everyone up to the transportation secretary has expressed a worry that kind of next week is when things could get much more ugly here. And so that's the sort of overall focus here. And the question is both, does it get worse next week, and does this kind of have long-term effects for this issue? The fear is that people start to leave the industry, and also that the pipeline of training air traffic controllers starts to dry up if this shutdown continues next month.
All right, Ben. Thank you, sir.
Mm-hmm.
Now time for some of today's trending tickers. Yahoo Finance's very own Brooke DePalma joins me now with a look at Krispy Kreme, Travel and Leisure, and Oklo. We're going to start off, though, with Krispy Kreme. That stock getting swept into the meme stock mania here. So our colleague Jake Connolly has a good write-up on this, as he often does, of course, Brooke. On the meme stocks, it's GoPro, it's Krispy Kreme, it's Beyond Meat. Jake citing one portfolio manager here saying, this is a throwback, he says, to 2021, the hope, dreams, themes, and memes kind of an environment that we were navigating that time. So is it 2021, Brooke? Is that what you see?
Yeah, well, what we saw this morning was definitely that meme activity that sort of reminded us of it. Krispy Kreme, as we make our way towards the close now, has pared back some of those gains. It's up still about 10%, but it jumped as much as 30% at market open, and certainly leading into pre-market trading this morning, it was up about 20%. And there's a few different factors here. So yes, it is that meme stock craze, the return of that's certainly hyping up investors. In addition to that, on Tuesday, they did announce a sponsorship deal with NASCAR. So maybe that's how it sort of got into this news realm of those meme stock traders. They also announced that they plan to open their first shop in Spain, and they also plan to open new stores in Brazil by the end of 2025. And so it was in the news, and then it sort of got captured by this meme stock craze. Also got a note out from Morgan Stanley that sort of identifies a bull case, a more base case, and a bear case. But this bull case that Morgan Stanley has only runs up to about $6 price target. Of course, the stock now trading, even with this run up, only about $4 per share.
All right, now turn to another name on our radar. That would be Travel and Leisure. That stock rising as the company reports a beat on earnings, lifts adjusted EBITDA guidance. This one, intraday record, Brooke, lifts the low end of its adjusted EBITDA forecast for the full year. Analysts like this name. I'm just looking, most have a buy. See only one sell, actually. I do see Jefferies, the team there. They cover this one. They're cited here as saying they're believers. Better than expected bottom line performance. They say coupled with slightly higher above consensus guidance supports, they say, the sustainability of the model.
Yeah, what's interesting is that model actually, it leans into what we've been hearing so much about. That's the high-income consumer. They're able to handle the headwinds that we're currently seeing right now. And on the call with investors this morning, the CEO over at Travel + Leisure said that consumers are prioritizing travel. And when they said, hey, wait a second there, in this sort of environment, they still are, he went on to say that they have been dedicated to fine-tuning their credit requirements and upgrading their overall consumer profile. So now, get this, their average household income for their consumer sits about $115,000. It caters to that high-income consumer who is remaining really resilient right now. And that's what we've heard from so many executives this past quarter, that if your consumer tends to be a little more high income, they lean into that. They're pretty resilient right now, and they're still willing to spend. Of course, keep in mind, this is a vacation ownership type business. These consumers pretty much are higher income consumers as well.
All right, and lastly, Oklo facing scrutiny. The Financial Times examining the company's valuation, pointing out several concerns. So this one under pressure. NuScale Power, I had seen that one down as well. I do see some pointing, Brooke. My old colleague, Jim Cramer, they're saying, he apparently on air referenced this Financial Times story about investor enthusiasm for Oklo despite its lack of revenue. We should know, Oklo, listen, might be down today. This one is monster move. It was still up last night, around 450% this year.
Yeah, 480% in the last year. And we also got that notion from Kathy Wood. She has that ARK Autonomous Tech ETF. She sold about 53,000 shares of this stock earlier this week on Monday. Also keep in mind, they plan to bring their first ever commercial advanced nuclear small modular reactor,
rolls right off the tongue,
SMR, online sometime in late 2027, early 2028. So with this run up, then they're not going to have this first commercial advanced SMR until that later timeline. So perhaps this was just really hot, really fast. And that's what we're seeing, this sort of sell off today.
All right. Thank you, Brooke. Appreciate it. Well, toy maker Mattel facing challenges with its U.S. business in the third quarter and shifts in retailer ordering patterns. Gross margins for the company also taking a hit in part due to tariffs and inflation. But as retailers enter the all-important holiday season now, we're navigating how to play the toy sector with the Yahoo Finance playbook. And joining me now, we got Citi Leisure and Travel analyst James Hardiman. James, always great to see you. Maybe start big picture, James, the toy industry, which you know so well. You know the sector, you know the names. As we head into the holidays here, James, how are you thinking about that sector? Given the conflicting cross currents, you got tariffs, James, you got a cooling labor market the consumer is dealing with. What is the backdrop?
Yeah, I think the most important facet of the backdrop is that demand has been strong, right? This year has been so characterized by tariffs, right? And the impact, whether it's going to be on the consumer or company margins, right? Who is going to pay that cost? We've actually made our way through that, I think, relatively unblemished. What's happened, however, is that retailers have really sort of waited until the last minute to make those ordering decisions ahead of the holiday. And that's ultimately why we saw Mattel miss yesterday in the context of its third quarter. They very much think they're going to make up for that in the fourth quarter because, again, product is selling. There's demand for those toys. And if you want to have toys on the shelves this holiday, retailers have to, and we've seen them begin to make those orders. It's 3 weeks into the fourth quarter, but by all accounts, that ordering activity has been very strong. And so at least, one toy company down, we'll hear from Hasbro tomorrow. But Mattel seemed very bullish with respect to the holiday season, despite this sort of shift in ordering patterns.
Yeah, I saw Mattel. I know you have a buy on the name. I saw you also raised your price target to 25. On Hasbro, so they report tomorrow. What do you expect to hear there, James? What are you listing for? Because I know you like that name too.
Yeah, so, unlike what we saw at Mattel yesterday, we expected a miss and they missed. We actually expect to see a beat and raise from Hasbro. Their secret weapon is a card game called Magic the Gathering, right, which is part of their Wizards of the Coast segment. And that game has a ton of momentum right now. And so I think there's an excellent chance that game, that segment continues to beat expectations. I guess as we think about offsets to that, right, it's their traditional business, right, the packaged goods, consumer products, toy business. And if you're looking for read-throughs from Mattel, there could be some weakness from that part of the business from Hasbro as well. The good news is, I think they were better calibrated in terms of expectations heading into this. But net, I actually feel pretty good about Hasbro's potential to put up a good third quarter on the strength of their Wizards of the Coast, and at least pass that through to the full year number.
James, since we're talking about these names, I got to ask you about this as well. Netflix is saying Mattel and Hasbro, they're going to produce toys, collectibles, and games based on the K-pop Demon Hunters film. We know that is a sensation, James. As a financial analyst covering these names, you saw that headline. What did you think?
Yeah, I mean, for starters, I think it's all incremental, right? So this wasn't in anybody's numbers, 48 hours ago. But then sort of the next level of analysis, whenever you're talking about an entertainment property, is how toyetic is it, right? That's the sort of industry lingo to suggest, right, this is a great entertainment product. Is that going to translate into great toys, right? And there's plenty of examples of good movies that didn't really sell toys. There's examples of movies that did a great job selling toys and were really bad entertainment. Hopefully, as we think about K-pop Demon Hunters, it can be a little bit of both and could ultimately drive upside for both Mattel and Hasbro.
James, always appreciate your time and those picks. Thank you.
Thanks for having me.
We're wrapping up today's Market Domination. Don't go anywhere. We've got you covered with all the action following the closing bell, including Tesla's Q3 results. Stay tuned for Market Domination Overtime. That is the closing bell on Wall Street, and now it's Market Domination Overtime. We're giving you a full coverage of all the moves to get you up to speed on the action from today's trade. And Yahoo Finance's Jared Blikre joining us now with the latest market action. Jared.
Thank you, Josh. Pretty risk-off day, especially concentrated in the more cyclical sectors. Saw a little bit of green in the defensives, and we'll get to that in a second. First, want to show you the intraday price action in the Dow, down 0.7% or 333 points to 46,590. NASDAQ Composite, very similar picture, but down a bit bit more, 93 basis points or 0.9%, and the S&P 500 down 0.5%. But the Russell 2000 down more than all of those, 1.3%, and the S&P 600, which excludes, it's small cap too, but it excludes unprofitable companies, down a bit less. I just want to show you the VIX too, still under 20, but we did have a little bit of elevation today off of those highs, but something we want to watch coming into tomorrow. Do we see continued weakness and more volatility? But here in sector action, energy stole the top spot, up 1.32%, followed by healthcare, staples, and real estate. Utilities, also defensive sector, that finished in the red. The worst off, industrials, down 1.3%, followed by tech, communication services, and consumer discretionary. And 3 out of those 4 are mega cap sectors. Speaking of mega caps, you can see we saw a little bit of green, Microsoft and Alphabet up 0.5%, but for the most part, more downside than upside. Apple and Amazon each off more than 1.5%. Want to briefly show you the semiconductors. Got some dark green there from Intel, AMD, Texas Instruments down 3 to 5%. In software, aside from Microsoft taking up a lot of real estate there, for the most part seeing a lot of downside action. IBM also positive, up 2%, but Salesforce another down day, 2.5%. And I'll finish off on disruption. The disruption trade, seeing some losses in Coinbase, Robinhood, Roblox, and a bunch of others. And I'll send it back to you, Josh.
All right. Thank you, Jared. Now let's get to senior reporter Inez Ferretti with the latest on gold and Bitcoin. Inez.
Yeah, Josh, and it was a choppy session for gold. Let me just show you the interactive so we can see on our Wi-Fi interactive that today we saw gold going lower earlier in the session, extending its losses from yesterday, its worst day in 12 years. But look at this, a choppy session for gold, up 0.2%, hanging around $4,100 per token. Look, the key takeaway from the sharp sell-off that you saw yesterday was that the drop seemed to be an unwinding of what appeared to be almost a momentum trade, even though gold isn't necessarily a momentum trade. But this big, massive rally that we've seen with gold year to date has made it seem like that type of trade. The bottom line is that traders have been watching the 4,000 level. If it breached 4,000, then you could see even a sharper sell-off. It's too early to tell right now, just off of today's action. But UBS saying that they believe that the sell-off was technical. They also say that the dips may be buying opportunities because they see gold going to 4,700 by the end of the first quarter of next year. Now, the other also asset that we have been watching, of course, is crypto as well, Bitcoin, because Bitcoin today was heavily under pressure, down 3.5%. And keep in mind that Bitcoin has been trying to recover from the volatility that it's seen over the last couple of weeks. You've had Fundstrat's Sean Farrell, head of digital assets over there, talking about this correlation between gold and Bitcoin, that usually it's gold that front runs, then gold rolls over, then it consolidates, then it's Bitcoin's turn. So that's what he's expecting as far as Bitcoin's concerned. I mean, you still have Wall Street that's very bullish on the token, but nonetheless, today's action not great for the cryptocurrency market in general. Right now, Bitcoin at around 108,000, just below that. Josh?
All right, thank you, Inez. Appreciate it. Well, Tesla's earnings are just hitting the wire. Let me bring you those headlines right now. Q3 adjusted EPS looks like it's clocking in at 50 cents. That's versus consensus at 54 cents. Looking at the top line, though, Q3 revenue, it looks like $28.10 billion. That is a beat. The street was closer to $26.36 billion. I'm just looking for Q3 gross margins. That also looks better than expected. I see 18% versus an estimate at 7.2%. Q3 free cash flow, there it is, $3.99 billion. That is a beat, a healthy beat. The estimate was $1.25 billion. The stock, at least initially here, we're down marginally, about 1.3%. Of course, keep in mind, this stock had made a run into this print. It was up about 80% in the past 6 months. Big questions, of course, investors are dealing with now. What does EV demand look like in this post-EV tax credit world, especially in the U.S.? We're going to hear a lot more. We want to hear a lot more from Elon Musk about how business is going in China, what the competitive landscape is like there. And away from the EV business, you're looking for any color and commentary you have on robo-taxis, humanoid robots as well. That'll all be in focus on the call. Tesla Q3 earnings are out. My colleague Ali Canal is joining me now. Ali, it looks like headlines here. Tesla posted a third quarter profit. That did miss what the street was looking for. I'm just seeing adjusted earnings. They were 50 cents in the period. It looks like analysts had modeled closer to 54 cents. The top line, though, is a different story. I mean, sales surge. Looks like revenue clocking in at $28.1 billion.
Yeah, sales doing really well. Profit not getting to that level that investors were hoping. And let's be real, Josh. I mean, the stock was rocketing throughout Q3, and that
80% in 6 months.
80% in 6 months, and that was due to a few things. We have record deliveries. We had this thawing between President Trump and CEO Elon Musk, but now it's a show me story, I think, for investors, especially when you look ahead. The robo-taxi rollout, autonomous driving, how Tesla plans to incorporate AI. These are all questions that we've been hearing about for quite a few months now, really the entire year. So I think it's going to come down to the call, the tone of Elon Musk, what he says when it comes to the future, especially after the expiration of those EV tax credits. We knew heading into this print that there was going to be a pull forward demand. It's not surprising to see those record sales. We saw those record deliveries. I think now it's a question of, okay, now that we don't have the EV tax credits, what happens to Tesla? Do we still see that outperformance on the sales side? Now, even before we had EV tax credits, Tesla did well, but now we have a lot more competition, a lot more companies out there that are rolling out sophisticated EV lines. And that's taking market share away from Tesla a bit. So I think it's going to come down to how optimistic Elon Musk is for the future. We know how heavily he is tied to this company, tied to the share price. Investors are going to want to listen closely to what he has to say. And it looks like we're off some of the lows already. It's stock pretty much trading flat in after hours.
Yeah, as you said, now all eyes on that conference call and what kind of color and commentary we get from Mr. Musk. Thank you, Ali.
Of course.
Well, Tesla Q3 earnings, they are coming out moments ago. Let's bring in out Seth Goldstein, senior equity analyst at Morningstar. Seth, the headlines have dropped. You got the results. Walk us through your initial reactions here, Seth. What do you make of the report?
Well, there's few surprises from the report. We would expect, following the strong deliveries numbers, for revenue to be up, and we'd expect gross profits to be up sequentially and for profits to bounce back following a week's first half start to the year in Q3. But the big question for me is there was really little commentary in the shareholder deck as far as what's the robo-taxi rollout plan, and what I want to hear on the call tonight, what management has to say about the plan to move into testing and to move from early testing, where we still see geofenced area and safety drivers, to more advanced testing where we might not see safety drivers, similar to what Waymo does in their actual operations right now. So I have a lot of questions. I'm hoping management answers on the call, but the initial numbers were not a surprise at all, given what we saw from deliveries and energy deployments earlier this month.
So looking ahead now, Seth, here's my question is what do we think Tesla EV demand is going to look like in the quarters ahead here in the U.S. in this post-EV tax credit world, Seth? We did have some Tesla analysts, financial analysts, on the show this week. They were forecasting you could see, in their opinion, some softness. What do you think?
I think we're likely to see Q4 deliveries decline and total deliveries globally for Tesla to decline in 2026, largely due to the U.S. tax credit expiration. If you go to a similar early EV adoption market where Germany was in 2024 last year, the German subsidy expired at the end of 2023, and we saw EV sales fall countrywide double digits in 2024. And I think we're likely to see the same thing in the U.S. starting in Q4 and through the first 3 quarters of 2026, because I think many buyers who wanted an EV likely took advantage of the tax credit, bought one in the third quarter, and so we're likely to see at least a few quarters of pull forward demand that occurred last quarter. So I think we're going to see a fairly weak EV sales throughout the country for all automakers over the next several quarters, and as Tesla's the market leader, they're going to be the most impacted.
Now, bulls might counter, Seth. They say, well, hold on, Seth. We have those lower priced models coming. That's going to boost volumes here in the U.S. What do you say to that?
Well, Tesla did release two models that are now under $40,000. So for buyers who are in the higher end of the more affordable vehicle category, you could maybe choose a Tesla, but it's still at the higher end of that price point. If you compare the Model Y at about $40,000 at the lowest level to, say, a Honda CR-V, Toyota RAV4, those start with the lowest level models at $30,000. So you're still asking buyers to pay up for a vehicle that is frankly not as good as what you get for the Model Y with the subsidy last quarter, because it's a more stripped down version. There's features that are not there. It's a longer charge time. It doesn't have extra features like rear view screens. So, they may sell well and you may get some buyers who were interested in EV and wanted the cheaper price point, but I still think you're asking people to pay up versus the median price of the midsize SUV category. And so that's why I think sales are still likely to fall.
Now, we've been talking here, Seth, about EVs. Of course, there are many Tesla shareholders, investors, fans, Seth. They're in it because they believe in Musk's AI vision and what they see as the great AI opportunity. Dan Ives over at Wedbush. Now, we know Dan, right? We Tesla bull of Tesla bulls. Here's what he told his clients. He says, we continue to strongly believe the most important chapter in Tesla's growth story, he says, is now beginning with the AI era. It's here, Dan says. It starts with autonomous and then robotics, and we believe the autonomous valuation is worth $1 trillion alone to the Tesla story over the next few years. What do you say to that, Seth?
Well, I think that's a very bullish view, and we believe long-term in the Tesla AI story. In fact, of our $250 fair value estimate, over half of it comes from full self-driving subscriptions, Robotaxi, and Dojo. And so we think that this is an important driver for Tesla, and we think Elon Musk will successfully pivot the company over the long term from selling cars today to software and robotics in the future. That being said, we want to assign as high of a valuation in our base case to what Tesla can get from Robotaxi. Remember, Tesla is not the only entrant like they were when they entered EVs last decade. And they don't have the first mover advantage because Waymo's already here. We also see regulatory uncertainty surrounding autonomous driving on robotaxis in Europe, and they likely won't be the market leader in China due to data export issues, making them not able to have their latest full self-driving software in China at any given time. So I think Tesla is not coming from as big of a first mover advantage. And so while we think they're likely to grow and maintain a big share of the ride-hailing market in the US over time, we do think that it won't happen starting next year. We still think testing is in the early stages, and we think the recent market rally is pricing in a lot of the optimism, a lot of the upside, assuming Tesla gains market share next year and becomes a successful entrant into Robotaxi, and we just see a smaller valuation opportunity for Tesla here.
I'm interested, you're a financial analyst, so when you look at that Robotaxi business, what are the kinds of data points, what are the kind of financial metrics, Seth, that you're looking for to try to gauge what kind of success they're having?
Well, the biggest thing I'm looking for is not financial right now. It's does the software work, and can it work safely, and can it work as intended, meaning without a safety driver in the vehicle and without a geofenced area? And if so, then can Tesla quickly expand and navigate the regulatory permitting issues to roll out? And so that's what I'm looking for right now. If the software is successful, Tesla will be able to monetize it like Waymo has done. And we expect that Tesla and Waymo will offer cheaper rides versus, say, an Uber or a Lyft, and use that as a way to convince new users to try it out. And once new users have a good experience and realize it's just as safe as riding with a human driver, we think adoption will grow in every new city in a pretty quick time frame. And so I would expect Tesla to be successful once the software works. But the big question for me is, when will the software be ready? Currently, I still think it's in early testing, and I want to see, Tesla's plan for being able to remove the safety driver where regulations permit to give me more confidence that we're going to see a full launch in the next year.
Seth, finally, that shareholder meeting is coming up November 6th. You expect shareholders to approve Musk's potential $1 trillion pay package? What do you think is going to happen?
I think we're likely to see the measure get approved. We saw the 2018 pay package get approved by a strong majority last year at the shareholder meeting. And this is really an extension of that package. This incentivizes Elon Musk to, if he can grow Tesla's market cap to a max of 8.5 trillion to get all tranches, as well as successfully roll out robotaxis, successfully roll out Optimus robots, and get more user adoption for full self-driving software, then he will get paid accordingly. And I think shareholders are happy with that, because if Tesla stock is going up to an $8.5 trillion market cap, Tesla shareholders are doing pretty well during that time period as well. So I would expect, just like last year, we see this vote approved as well.
Seth, great to see you. Appreciate that instant analysis, sir. Breaking news, third quarter results for IBM hitting the wire just moments ago. Let's get you those numbers. Q3, it looks like operating EPS 265. The estimate was 241. Looking for the revenue. Q3 revenue, 16.33 billion. The street was closer to 16.1 billion. I'm just looking through the segments quickly. It looks like consulting revenue, 5.32 billion. The estimate was 5.2 billion. Looking for software revenue, there it is. That's 7.21 billion. That is smack in line with what analysts were looking for. Q3 free cash flow, 2.37 billion. Estimate was 2.21 billion. The AI book of business, IBM is saying, stands now at over 9.5 billion. And just looking ahead for some forecasts from IBM, they see full year free cash flow 14 billion. The estimate was 13.48 billion. They see full year revenue at constant currency FX above 5%. It looks like the stock, at least initially here, we're under a bit of pressure. For more on this and a closer look, get some instant reaction to these numbers, let's talk to an analyst, pick up some more results. That would be Synovus VP and Senior Portfolio Manager Dan Morgan. Dan, it is good to see you. So IBM's results just crossing here. It looks like, at least initially, the stock's down about 4%. What do you make of the results, Dan?
Well, Josh, you kind of went through the top line and bottom line in terms of revenues and earnings. Of course, that was a beat. Everybody was really focused in on the software segment revenue because they had missed on that in the first and second quarter, which had led to a huge sell-off. And as you said before, they're pretty much in line at 7.2 billion on the software group. That's up about 10.5%. Infrastructure was also a beat at 3.56 billion. Street was at 3.44 billion. So those were the two big driving forces coming into this report, was going to come from software and then also infrastructure. Software is obviously being impacted by the HashiCorp acquisition. They have Red Hat, and then you look at the new Z17 mainframe upgrade that they're going through. That's really pushing the infrastructure group. And it looks like they got slightly ahead on consulting, which we're only looking for 1% growth coming in this quarter. So looked really good. And then the guidance, as you mentioned, Josh, very strong for fiscal year cash flow in terms of expectations, and also the amount of business they did in terms of AI. So looks to me like a good report, but you said the stock was down. So
down about 4%.
Can't figure it out.
Down about 4% here. I do know, that some analysts had said, Dan, expectations had kind of climbed into the print. Management, they noted, decided some growing optimism, so maybe some give back what we're seeing here. I am interested, Dan, when you think about, I take a step back, we think about that broader, AI trade and trend, Dan, which we talk so much about. What is IBM's role and place in that trend, Dan?
Well, they're much different than, let's say, an NVIDIA or, let's say, some of the hyperscalers that we talk about often together. They're a little bit more muted. They did come out and say they did, 9.5 billion in AI bookings for this upcoming third quarter. They also recently made an acquisition, or a partnership, with Anthropic to be able to use their Claude chatbot, which competes against OpenAI ChatGPT. So they are making strides in the area. They're not as ingrained, let's say, as next week we're going to get Meta, Google, and Microsoft coming out with these huge CapEx budgets that are being dedicated towards AI. They're in a much different area than that. They're not spending near the amount of money that these other companies are. So I would say that their strategy is solid, but it's not as, let's say, flamboyant or out there as like we might get from, let's say, a Meta or an NVIDIA.
Let me ask you this. I do see another headline here. Let me run by you. And maybe this explains at least the initial reaction. Sales in the hybrid cloud unit that includes Red Hat, Dan, that increased, it looks like, 14%. And I'm seeing that was a slowdown from the previous quarter and below what the street had modeled. They were looking for closer to 16%. I wonder if you think that's why maybe we're seeing a pullback here.
Yeah, good point, Josh. I mean, the consensus on the third quarter was 15.7. They came in the 14% range. So that's below. And just, for people understanding these different segments, the hybrid cloud group is basically a combination of, let's say, infrastructure as a service, which we know with Azure and AWS, you're taking data, you're moving it out on a data center, and then they also keep data in-house. So it's a hybrid. They have something that they do that's different than these other players in terms of splicing the data outside and keeping, and that's what their whole packages and offerings are focused on. So that was, you said, a bit of a miss. So obviously that's people kind of scratching their heads, probably looking for a little bit better growth in that segment, and that's probably why they came up a little bit short.
What about, Dan, IBM's position in quantum computing? Because I know there are some bulls on the street. They actually do flag that, Dan. They think that's a, in their words, underappreciated potential catalyst for IBM in the quarters and years ahead.
Well, you're right, Josh, and that's a huge opportunity for them. We know that IBM has already come out, said they expect to have a commercialized quantum computer by 2029, 2030. And there's a race going on right now with the likes of Amazon, Google, Microsoft, Honeywell, kind of the bigger players. And then you have some of these startups like Rigotti and some of these other names out there, quantum computing, that are racing to come out with the best mousetrap. And, Josh, I would say, and you've been at this a long time like I have in the tech space, I mean, IBM you would think would be really equipped well to develop a really strong quantum computer just because their core knowledge is really in developing big machines like mainframes, right? And so you would think they would have an advantage over, let's say, Microsoft, who's more of an enterprise software player, or Amazon, who's has AWS in the cloud, but they're really a big, internet marketer, or Google, a big search player. So, they already have more quantum computing machines out there right now that are being used than any other company. So I think they have a great leg in that space, and we may be talking about quantum here in 3 or 4 years like we're talking about AI right now.
Dan, always great to see you and to have you on the show. Thank you so much. Well, that's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow for all of your coverage leading up to and after the closing bell.